The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Wednesday, 10th day of September, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room, so that one's reserved for members only and those who are taking the 1-week free trial. If you've not taken the 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step, a couple times, how to take the trial. There's no credit card required, and when you take the trial, you get 5 consecutive trading days. Weekends don't count against you. And you have access not only to the live training room, but to everything we offer. In fact, we treat you just like you were already a member for 5 consecutive trading days. No credit card required. So you can focus on what's being taught, get your mind in learning mode, and at the end of the 5 days, you'll be able to make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you will have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Christian Financial Radio Network since 2005. But you don't have to remember all that, just youtube.com/CFRN. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips. And again, it allows you to see how we've evolved over the years. This is our schedule for each afternoon broadcast. At 1 p.m. Eastern, Michael will join us for a recap of what happened this morning in the live training room, and then a little live trading on the TradingView platform. But we'll start out where we do each and every day with our daily devotional. And we're wrapping up a topic, enemies of the heart. Today is day 5 of 5. We'll begin with a new topic tomorrow. Today's scripture is James 4, verses 1 through 3. And I'll share it with you from the Message translation. Where do you think all these appalling wars and quarrels come from? Do you think they just happen? Think again. They come about because you want your own way and fight for it deep inside yourselves. You lust for what you don't have and are willing to kill to get it. You want what isn't yours, and you will risk violence to get your hands on it. Now, this was written thousands of years ago, but does it not kind of spell out exactly what's going on right now between Russia and Ukraine? Just as one example. Continuing in verse 2. You wouldn't think of just asking God for it, would you? And why not? Because you know you'd be asking for what you have no right to. You're spoiled children, each wanting your own way. James 4, verses 1 through 3. Today we're going to talk about taking your desires to God as we wrap up this topic, enemies of the heart. Each of the enemies of the heart is energized by the idea that somebody owes something. Now, the first enemy we talked about was guilt. Guilt says, I owe you. Then we talked about anger. Anger is fueled by the notion that you owe me. Greed is kept alive by the assumption that I owe me. The fourth hard issue is no different. Jealousy. Jealousy says God owes me. When we think about jealousy or envy, we immediately think of the things others have that we lack. Looks, skills, opportunities, health, height, inheritance, etc. We assume our problem is with the person who possesses what we lack. But let's face it, God could have fixed all of that for us. Whatever He gave your neighbor, He could have given it to you too. That's why you may feel inside that God owes you. Jealousy can terrorize your life and wreak havoc in your relationships. The good news is this behemoth, like the other three, has a vulnerability, and it's something you might not expect. Stop coveting what others have and start asking God for what He knows is best for you. As James says, our external conflicts are the direct result of an internal conflict that has worked its way to the surface. We want something, but we don't have it. So we get in fights with others. The desire James is referring to in this passage represent unquenchable thirst. Our thirst for stuff, money, recognition, success, progress, intimacy, sex, fun, relationship, partnership. I could go on. So, what do we do with desires and appetites that can never be fully and finally satisfied? James says we take them to the one who created them in the first place. In other words, James is giving us permission to pour out our hearts in an unfiltered conversation with our Creator. Every concern you have, great and small, matters to the Father because you matter to the Father. Whether it pertains to your love life, your career, your marriage, your parents, your children, your finances, your education, or your appearance, bring it to Him. And keep bringing it to Him until you find the peace to get up off your knees and face the day, confident in the knowledge that God cares for you. Let me assure you, your heart will always be dear to His heart. What is your heart aching for? Spend some time in absolutely free, uninhibited conversation with God about what you feel you lack. Ask Him to bless you in the way He knows is best, and to reveal His love to you along the way. I hope you've enjoyed this devotion on the enemies of the heart. We'll pick up with a new topic tomorrow. Let's pray. Heavenly Father, forgive us when selfish desires lead us into conflict, or when our prayers are driven by the wrong motives. Purify our hearts so that what we seek is aligned with your will. Teach us to desire what brings you glory, not just what satisfies ourselves. Fill us with peace, humility, and a passion for your purposes. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 175 points. The NASDAQ is up 63. S&P 500 is up 30. The Russell 2000 is up 2 points. Pretty quiet. And again, the mixed market scenario. We like to see the four major indices all the same color. As futures traders, we can be long, short, long again, all in the same hour, if that's what the chart tells us to do. But when we have mixed markets where we've got some red and some green, it's a little bit of a tug of war. And we don't get quite the same follow through on the trades that we get when all four of the major indices are the same color. In the commodity basket, crude oil up $1.36, trading 63.96 last. That's a gain of well over 2%. Gold up 4 cents on the session, trading 36.8260 last. Silver up 30 cents, trading 41.65 last. And the Asian markets at the close. The Nikkei posted a gain of 378 points, almost 1%. Shanghai rose 5 points. The Hang Seng gained 262 points, just over 1%. And in the European markets at the close, FTSE down 17, the DAX down 85, the CAC up 12. Pretty quiet there. So we had a green day in Asia. It was a mixed day for the UK. And as already mentioned, it is a mixed Radio Wednesday here in the US of A. Dow in the red, 164 points. Hold on for me 1 second. And just like that, we're back. Okay. We did the numbers from around the world. Got some new all-time historic highs happening today. Let's hit the news and we go to the charts. Israel has claimed responsibility for an airstrike yesterday targeting Hamas leaders in Qatar. Hamas said the strike killed 5 members, but not senior leaders, including its lead negotiator. The strike on Hamas residential headquarters marks Israel's first known attack on Qatari soil. Earlier this year, Iran fired missiles on Qatar's Al Udeid Air Base, which hosts roughly 8,000 to 10,000 U.S. troops. In retaliation for U.S. strikes, amid Iran's 12-day war with Israel. No casualties were reported in that strike, with the U.S. intercepting most projectiles. Yesterday's attack came after Hamas leaders met with Qatari officials to discuss a U.S. proposed ceasefire in Gaza. Israel said it acted alone, calling the attack retaliation after Hamas claimed responsibility for a gun attack at a Jerusalem bus stop. Meanwhile, Israel called for a full evacuation of Gaza City, where an estimated 1 million Palestinians reside, ahead of an expanded ground operation. Israel controls roughly 40% of the city. I don't know how many of you saw the video. It was on the news last night. It was shown to Congress. See if I have it here. A House hearing on an unidentified aerial phenomena. We no longer call them UFOs. They're now UAPs. Stunned lawmakers when video evidence showed a U.S. drone firing a Hellfire missile at an orb off Yemen, only for the object to remain intact and keep moving, raising urgent questions about technology beyond known military capabilities. At a House Oversight Subcommittee meeting on UFO transparency and whistleblower protection, Representative Eric Burleson unveiled the video. The footage shows an MQ-9 drone tracking an unidentified UFO orb as another MQ-9 launched a Hellfire missile. The missile struck the orb, but instead of destroying it, bounced right off of it. That's a Hellfire missile smacking into that UFO, and it just bounced right off, and it kept going. According to journalist George Knapp, there are servers where there's a whole bank of these kind of videos that Congress has not been allowed to see. My question is, who's not allowing Congress to see them? I mean, probably some activist federal judge somewhere, because they rule the world now. So anyway, it's kind of scary. In fact, the guy that showed the videos to the congressman, he asked them, he said, "Hey, does that scare you?" He asked 3, and I think all 3 of them said yes. I mean, we don't have any idea what this is. Now, could it be something that's part of creation? Or is it something else? We don't know. I guess that's part of the scary part. Oracle stock jumped today as much as 39% in early trading after the software giant said its AI-fueled cloud revenue is set to jump to $144 billion by its 2030 fiscal year. That marks a massive leap from the company's projection of less than $20 billion for the business in its current fiscal year. Yeah, that's quite a jump over the next 5 years to go from $20 billion to $144 billion. The CEO said in a statement yesterday, "We expect Oracle Cloud Infrastructure revenue to grow 77% to $18 billion this fiscal year, and then increase to $32 billion 173 billion, 114 billion, and finally 144 billion over the coming 4 years. And the stock is up $96 on the session, trading 337, roughly 338 bucks, up about 40% on the news. Now, the stock's gain comes despite Oracle reporting earnings for the first quarter of its fiscal year 2026. I think they meant 2025. It's a typo. That fell below Wall Street's expectations. The company reported revenue of $14.9 billion, slightly below the $15 billion expected by analysts polled by Bloomberg. The software giant's adjusted earnings per share of $1.47 also came in below the projected $1.48. Missed it by a penny. President Trump has requested that the EU impose 100% tariffs on India and China to pressure Russia over its war in Ukraine. Now, we just talked a few minutes ago about Israel's strike on Hamas. Now, Qatar is harboring Hamas terrorists. And Israel, Netanyahu, he said repeatedly, we're not attacking you, Qatar. We're attacking the terrorist Hamas that you're harboring. Well, President Trump, as he was going to dinner in Washington, D.C. last night, he said, I am not happy about this. So we'll see what comes of it later today. Now, getting the EU to impose 100% tariffs on India and China, boy, I don't know how that's going to fly. Trump made the demand in a call with senior U.S. and EU officials in Washington yesterday. A U.S. official said they would mirror any tariffs imposed by the EU on China and India. At the same time, Trump said the U.S. and India have agreed to resume trade negotiations after weeks of back and forth over India's purchase of Russian oil. I'm pleased to announce that India and the United States of America are continuing negotiations to address the trade barriers between our two nations. Trump wrote that yesterday on social media. Meanwhile, the Supreme Court said yesterday it would quickly review a high-stakes legal challenge to President Trump's tariffs, setting up a resolution as early as this fall. How the U.S. Supreme Court rules on this, this could possibly be their single biggest ruling ever. America as we know it, I think, could cease to exist. Oh, we'll still exist, but not as we know it. We had some econ reports this morning. U.S. producer prices, or the PPI, fell unexpectedly last month, dropping 0.1% from July. The Labor Department reported today that its producer price index, which captures inflation in the supply chain before it hits consumers, showed that wholesale inflation decelerated in August after advancing 0.7% in July. Wholesale services prices fell 0.2% from July on smaller profit margins at retailers and wholesalers, which might be a sign that those companies are absorbing the cost of President Donald Trump's sweeping taxes. See how they like to slip that in there, taxes? Tariffs on imports. You know, America did just fine long before there was an income tax. We just taxed those that wanted to do business with them. Except we didn't call it a tax, we called it a tariff. Worked then, no reason it can't work now. If the left could get out of the way, but they don't seem to be able to. And that's a shame. That's a real shame, because we're all going to suffer for it. Shares of electric air taxi operator Joby, which trades under the symbol JOBY, surged today after the company announced Uber would add its Blade helicopter service to the platform. Well, if you've ever ordered an Uber from your smartphone, you can now order a helicopter. True story. Starting next year, Joby, which bought Blade's passenger operations last month, will let Uber users book Blade helicopter and seaplane trips directly on the Uber app. Blade currently offers short helicopter rides as well as seaplane trips across various routes in the New York City metropolitan area and southern Europe. Soon, Blade's services will be available on Uber, the world's largest ride-hailing app. Joby stock jumped 4% in early trade. Now it's up just a little over 1%. Doesn't say what the average cost for a 15-minute flight is. It doesn't give any kind of pricing. Dig a little deeper. No, but I'm sure we'll hear about it in the next day or two. Poland. Now, we got another powder keg here. Sought a consultation of NATO powers after shooting down drones that crossed into its territory during Russia's latest massive airstrike on Ukraine, calling the incursion an act of aggression. Prime Minister Donald Tusk said the airspace violation in the early hours this morning amounted to, or Wednesday morning, their Wednesday, to an intentional provocation from Moscow, forcing the NATO and European Union member state to close its airspace and order citizens in the eastern part of the country to stay indoors. North Atlantic Treaty Organization, NATO Secretary General Mark Rutte denounced Russia's reckless behavior and confirmed that the alliance discussed the incident after Poland invoked Article 4 of the alliance treaty, which triggers consultations and can open a path to coordinated action among allies. So that's the whole part of being a part of NATO, is everybody's got everybody's back. So if Russia in any way endangers Poland, invades their airspace, as they did, NATO is supposed to rise to the occasion and have their back. We're waiting to see what's going to happen. This is going to be big. Because either one, it's going to show us that NATO is of no real value, something Trump said for quite a while. At least he got everybody to pay their fair share of the tab. But if NATO's not going to do what NATO's supposed to do in these situations, then what's the point? Mortgage rates hit their lowest level since last October, and people took notice. Applications for home loans surged last week. According to Mortgage Bankers Association data, the 30-year fixed mortgage rate declined for a second week, falling to 6.49% in the week ending September 5th. The decline sent signals to borrowers who applied for 9% more mortgages than the previous week. The housing market may be beginning to thaw after elevated mortgage rates and high-priced housing have helped to freeze sales. Mortgage application volumes have been at historically low levels as interest rates have hovered above 6.5% for most of the year. And President Donald Trump's nominee to the Federal Reserve's powerful board may soon work alongside the same central banker the president tried to fire weeks ago in what would be a stunning milestone in Trump's ongoing bid to bend the historically independent Fed to his will. In a Tuesday night ruling, a federal judge blocked Trump's unprecedented firing of Fed Governor Lisa Cook. Today, Stephen Moran's nomination to become a Fed governor got the green light in a procedural Senate committee vote. Soon, all 50 senators will vote on whether to confirm him, a hurdle Moran is expected to clear in time to join the Fed for its rate-setting meeting next week. All right, Logic 247. We hit a bump in the road. We're in week 371 of Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just the E-minis, but also crude gold and silver. Over the last 371 weeks, we have issued over 20,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern. She will update it this afternoon, early evening, as she does each and every day. At the time of the recap, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 34 logic alerts. At the time of the recap, we were still waiting on the outcome of 8. It gave us 26 actionable alerts, of which 6, or 23%, would have been stopped out, again based on simple market structure and a simple process we teach all of our passport holders. Now, the real purpose of the logic alerts is to teach you how to read the chart. If you want to trade for a living, you got to be able to read the chart. If you can't read the chart, it's going to be very difficult to learn how to trade. 371 weeks is a very long time, a little over 7 years. But years before we rolled out Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They're posted as a static report shortly before the Globex open each evening. We're in the Wednesday session now, but it began last night at 6 p.m. Eastern. The Thursday session will begin tonight at 6 p.m. Eastern. For the CTAs, I do my best to get them out 5 minutes ahead of the Globex open each day. If they're not coming out ahead of the open, I put a message out in the discussion group so nobody's waiting for something that isn't coming. But we've got a pretty good track record to get them out on time since I started that. Been about 3 months now, I think. So all of our traders, all of our trial members had all of these targets 5 minutes before the markets opened last night. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now we got a new all-time historic high today. So let's go take a look at that, because that's a big deal, right? And as we see again and again, we put in these all-time historic highs. And look where we closed on this day. New all-time historic high last Friday. And then we closed way down here. So the new all-time historic intraday high. Now remember, there's a difference. Yesterday, I think we put in a new all-time historic closing high. The close yesterday was 65.30 and a quarter. Yep. Yesterday, new all-time historic closing high, but not a new intraday high. Today we have a new intraday high. And as long as we don't trade below yesterday's close, we'll have a new all-time historic high, closing high today. So 65, 65 and a quarter. Click that. All right. We got it within one tick. Okay. We're closing in on that 100% fib extension. We hit it. We're going to have to recalculate it. We'll go from this low to this high to this retracement low. It's been hanging there for a while. So we hit it and we came off pretty hard. I mean, but again, we've seen it happen over and over. Now, the green line's called the BBC, stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. And as you can see, the pullback held, the pullback held, the pullback held, the pullback held, the pullback held until we traded through. And then the pullback held, and the pullback held, and the pullback held, and the pullback held. And even here, the pullback held. We spiked it pretty good. But as long as the candle is touching the green line, okay, see, we spiked it, and the next day we popped right back up. Okay, so that pullback held. It was a nail biter. Took us down to the 50% fib extension. So we get another leg and another retracement, another leg and another retracement. Now on this day, it was a Friday, price came all the way down to these lows. But by close of business, we were back above the BBC. Let me make sure I refresh this fully. Yep. Yep. Okay. So that's where we stand right now. This thing, even though we put in a new all-time historic high, hopefully you can see how this thing's starting to arc over. If we don't get a retracement pretty soon, that's going to spell big trouble for the markets. They're already talking about, even if we do get a Fed rate cut next week, there's going to be a sharp correction. Because the rate cut's already baked into the cake, and it's going to be the old buy the rumor, sell the news kind of thing. People are going to buy right, traders, institutional traders will buy right into the Fed announcement. And whether he does or doesn't give a rate cut could lead to a very sharp correction. Now, this is the shallowest possible retracement right here, the 24. 61.67/68. Below that's the 38. Down here's the 50. Okay. Trees don't grow to the sky, and neither do the markets. So I'd much rather see us, rather than just implode, make an orderly progression down to the 50. Or we could just rip the Band-Aid off, just rip it off, get it over with, and then get a strong rally into the end of the year. The old Santa Claus rally. Okay, the Logic 247 alerts and the Concierge Trade alerts are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose years ago, and I've stayed with it. The vertical line separates today, Wednesday. Here's Tuesday. Here's Monday. These are the weekly trading zones, these horizontal lines. Okay. They're published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Monday, we found support at this zone, 64.92/93, multiple times throughout the day. Yesterday, we also found support at that zone. Now, support will always send the market looking for resistance, which it found at the zone above. This was the opening candle last night. Now, this is interesting. The step line crossed blue and climbing, but price continued to rise. That is unusual. Typically, when the step line crosses from the left side to the right side of blue and climbing, you start to see. Now, we did get the retracement, but in a very unusual way. Okay. Ran up. It's like we had to hit that target, which was based off this high right here from September 5th. That was the target. 65.41.75, and so I put it at 65.41. And there it is. A resistance. People always say, how far left do you have to look, Dwayne? Well, in that case, we had to look all the way back to September 5th. Resistance sends the market to support. Okay. When price drops to a weekly zone, we expect support until proven otherwise. When it rallies up to a weekly zone, we expect resistance until proven otherwise. So we consolidated. One of three things happens when price encounters a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. So we consolidated at the weekly zone. We hit the long target, resistance, which sent us back to support. Remember, the pullback to the BBC holds more often than it doesn't. Eventually, it will trade through, but the pullback holds more often. And this was support times 2. Number 1, you expect the pullback to the BBC to hold, and when price drops to a weekly zone, you expect support. So that's support times 2. That sent us back up to the long target. And then 8:30 this morning, when those PPI numbers came out, made quite a splash, gave us the new all-time historic high. We got a retracement back to blue and climbing. Then we put in a lower high. Now price has dipped below the BBC. It's sitting right on top of the long target. We got red and falling overhead. If we continue lower, got a bullish cross here. You got a weekly zone. You got these lows. You got these lows. I would not really consider shorting until about 65.25. From 65.25, you're good to go down to this bullish cross right here, 65.13. Okay. Now it's possible we could see the short target today, the way this thing's turning. On the Dow, here's where we opened it yesterday. Went from zone support to zone resistance. This was the opening candle last night. We dropped to the BBC, pullback hill. We overcame red and falling. Got a leg and a retracement, a leg and a retracement, a leg. And then we got a healthy retracement. We got below the BBC. We came all the way down, almost to this bullish cross. This short target is based off this bullish cross right here. That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Buyers came in early, drove us all the way up to the long target. And then the second time down, we traded through the short target all the way down to the weekly zone where we found support. We spiked it, but we're sitting on top of it for 1, 2, 3, 4 30-minute candles. The Russell, here's where we opened last night. We dropped enough to get your goal for the day, but we didn't quite hit the short target. Buyers came in a little early. Drove price up to the BBC. We consolidated. Price got below the BBC. And then right here, price took off on that 8:30 news, the PPI number this morning. And it took us right up here to where blue turned to red. Price drops back to the zone, drops back to the top of the long target. Support, but again we put in a lower high, sign of weakness. Now we're below the BBC. Blue and climbing has hooked and turned over to red and falling. So we've got potential support right where we're at here. See this right here, where the black step line crossed red and falling? We're right there. That's where this low is. Below that, we've got potential support here, here, then the short target, and then the zone where we found support yesterday. So from support at the zone to resistance at the zone. Zone's 2393/94. This one's 2370/71. The NQ. Here's where we opened last night. The step line crossed. That's typically when we get our retracement to the BBC. But just like the ES, price continued to climb. Got to the short target. We printed this little doji right here, and that sent us back to the BBC. We actually had a candle open and close below the BBC. That's typically confirmation that price will continue lower, but in fact it didn't. Okay. These lows right here were respected. We go back up to the long target again. Put in this new all-time high. 24 24,044 and a quarter. Then we get a lower high and a lower high and a lower high and a lower high. Bearish. Blue and climbing's turned to red and falling. We're sitting right on top of the long target. Okay. When we trade through a long target on the retracement, that long target will often become support. But it looks like we're working our way below it. But you got potential support right here. And then again here. And then the zone. Then this bullish cross. And then this short target. Crude. Here's where we opened last night. Ran up to the weekly trading zone, consolidated for a few hours. Remember, these are 30-minute candles. You can see how price goes from zone to zone, back to the zone, up to the zone, etc. Again, the zones are published Monday morning, 6:15 a.m. Eastern. I think there's some trouble on the YouTube channel. Let me see what happened. See if it's still working. Yeah, looks like it might be. We'll see. All right. So, consolidated the zone, make it up to the long target. And we get a retracement back to the zone, support. So we get another leg and a retracement, a leg and a retracement, and then a big leg. It takes us almost to the zone overhead at 64.15/20. The high was 64.08, so we missed it by 7 ticks. Okay, but that is where we would expect resistance until proven otherwise. Gold. We had a gap lower open last night. In the first 30 minutes, we hit the short target. Support sent us up to resistance. The BBC, the pullback held. And we dropped to support here. Not really an area I would have anticipated support, but that's where buyers chose to come in. Drove us up to the BBC. Blue and climbing's chasing price, and it takes us all the way up to the long target, up to the zone. And then we do some wide consolidation above the zone, but now we're dropping. We're back below the BBC. We got red and falling overhead. Got a bullish cross right here. So watch that as potential support. And 36.70 to 36.69. That would potentially be a good short trade. Silver. Here's where we opened last night. This is the opening candle. So in the first 30 minutes, you only need 2 pennies in silver to get your goal for the day. Support gave us a little bounce. Came back to the short target again. Support. Red and falling turns to blue and climbing. We get above the BBC. We consolidate here at the weekly zone. Remember, that's what happens 70% of the time. We get a leg and a retracement. Support times 2. Another leg and a retracement. And right now, we got red and falling, but we're sitting right on top of the BBC. So I don't think silver's going anywhere anytime quick. But a $1 move in silver is worth $5,000 per contract traded. A $1 move in crude is worth $1,000 per contract traded. And gold, a $1 move is worth $100 per contract traded. Michael's here. He's going to give us a recap of what happened this morning in the live training room and do a little live trading on the TradingView platform. After that, I'll come back and wrap things up with our good word for the day.
Huh. Interesting. All right, I am ready now.
What's wrong?
Sorry. I came back from mowing the lawn and my computer had rebooted.
Oh, yeah, one of my machines rebooted overnight. So I guess there's a Windows update out there. My main computer, I've got it set to not automatically update. So
yeah, I thought I did too, but anyway, here we are.
all right,
We're
looks
back.
good.
Okay, I'm ready to go. All right, good afternoon, everyone. Today is Wednesday, the 10th day of September 2025. Now, if you have not taken a free trial with us and you'd like to, go to mytradingiq.com, click on the purple button right there. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page where all we ask for is your name, your email, and your phone number. Down at the bottom here, make sure you give us your TradingView login ID. Okay, we really need that TradingView login ID. If you don't give us that, we don't know that you took the free trial. So you really got to get that to us. All right. All right. Let's see. This. We had a better day than yesterday, but not our best day of the week. But it was better than yesterday. Today we managed to get 121 ticks on the NQ. We lost 5 on the Russell in the last trade. We made 7 on gold and we made 5 on the ES for a total of $712.50 with one contract. Today it took 6 minutes and one trade to get to $1,250. Hey, look at it, just like yesterday. And it took a total of 36 trades, just like yesterday. So on the month now, we're at $7,390 over 7 business days, averaging $1,055 per contract per 2-hour business day. But we had that one really big day. That was our biggest day since like April, I think. Anyway, that puts us at $191,835 on the year, 154 business days, averaging $1,245 per contract per 2-hour business day. If you were to quit trading when you get the goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work just under 21 hours and you'd be up $117,302 if you did it just like me, averaging $5,617 per hour. Okay. All right. Let's get into the trades. We'll start out here with the gold. All right. Here we are. Gold. Our first trade on gold was right here. We picked up 12 ticks on that. 12 ticks on that. Yeah, I guess we did. We picked up 12 ticks on that. Is that where we got the gold for the day? No, it's not. We got the gold for the day on the Russell. All right, so we picked up 12 ticks on that. And then I say right there. It might be over. Yeah, it must have been there. I don't know. I'm just looking at the timing on my notes. But we picked up 12 ticks on that. And then the next one we stopped out, we went to -3. Then we did something. Oh, we went to -1. That's what it is. Yeah, we got a little bit of profit here. We got 2 ticks in profit, went to -1. Then we had a break even right there. Oh, I made that a different color. Yeah. Oh, I know why I did, because it wasn't a valid trade. I got out of that at break even, but it wasn't a valid trade when I took it. All right. Then we had a +2 there to get us to +1, and +6 there to get us to +7. And that is where we ended it with gold for the morning. Now, the rest of the day you can see right here. Let's see. Nope. One trade right there. And one trade right there. And that was it. So 2 possible trades during the break on the gold. All right. The Russell, we ended up with -5 on the Russell. Now on the gold, our high of the day was where we ended it. No, I guess 12 was the high of the day. So we didn't end with the high of the day on gold. 12 was the high of the day on gold. The Russell, our high of the day was 25 ticks, our very first trade. We got the gold for the day. It was all downhill after that. Here it is right here. We grabbed that one, got 25 ticks. Bang. Goal for the day. And then we didn't do anything until over here. We had a break even. Then we stopped out. That put us down to 10. Then we stopped out again. That put us down to -5. And we had a break even and a +2 and a +5 to get us to +2 overall. Then we had 2 other trades that I don't see, and then we stopped out. We had 2 other trades. We went from +2 up to +8, and from +8 to +10, and then we stopped out and went to -5. So that's how it all came together. During the break, it looks like there were no trades during the break. None. All right. And that was the Russell. Now the ES, we ended up with just a few trades and just a few ticks. On the ES, you can almost see the whole day here. Our first trade was right here on the ES. We picked up 2 there. Then picked up 2 more there to get us to 4. We had a break even, and then somewhere else in here we picked up 1 more to get us to 5. Sorry, here it might have been right here. I don't know, that seems kind of late. There was 1 more in here. We picked up 1 tick to get us to 5, and we ended up with 5 ticks on the ES. I just showed the ES during the break. Let's see. During the break, the ES from here to here. No trades. Okay, no trades. Now, the NQ. Let's get the NQ here going. There weren't that many bars today, so I can scroll this way. All right, so here's where we started on the NQ. It's a big move in here. Now, I'll go over that stuff in a few minutes, but right here, our first trade on the NQ was a break even. Then we had another break even. Then we finally got on the board all the way over here on the NQ. We got +8 on that. Then we stopped out, -17. Nothing. And we went from -17 to -11. Then nothing. Then we went from -11 to +9. There's a 20 tick trade. And then went from break even, then +9 to +17. Looks like. All right, and nothing. Then finally we had a big trade right here. We went from +17 to +63. Then we went to 79 to 110, and then 142. Right. Then we stopped out, went down to 117, break even, back up to 121, and whatever I got on this one at the very end, I didn't count. I really don't remember what I got on that, but that was the last trade of the day of the morning session. Now, during the break, that was a trade right there. That was a trade. 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 There were a lot of nice trades on the NQ during the break. And that was it. So now we just got to get ready for more trades. All right. When I say that was a trade, what I mean is we came out of the oversold. We had a cross above the midpoint, came out of the oversold. Came out of the oversold, cross above the midpoint, the flat midpoint. It's going to be a flat midpoint. All right. The bar before it needs to be flat. The whole thing needs to be flat. Okay. All right. Well, that was all of that stuff. Now, I want to look at the bigger picture stuff because I said I was going to do this morning. I was concerned about doing 100% retracement of the whole morning move. Morning move actually began way over here, and I was concerned about doing 100% retracement when this got well down below this area right here. I had drawn this in. I said it should bounce from here, and if it doesn't, well, then down to here would be the next level. And then down to here would be the final level. Okay, 2384. So what it's doing right now, this is a 50%, the second test of this year on 50% retracement to this leg down. And the way it should end up now, I said I was going to use, I had a thing I made for a template, right? This guy right here. This one's too big for what we're looking at right here, but we'll be able to use it when we get the bigger moves. This is going to be our template. I bet we're going to have other moves that are exactly the same size. But what I would expect right now, that's a little too big. I was looking for that move up right there. Now, what I would think is going to happen on the downside will be another leg like this one right there. Another leg like that, and that pretty much goes through the 100% retracement of the day, which would be right in here. I guess at 8:30, yeah, be right in here. Anyway, we're going to trade what's in front of us, but it is looking a little bearish right now. And you know, we have CPI coming out tomorrow and FOMC coming out next week. So there's lots of things you can do to prepare for that. I won't get into all that right now, but suffice it to say that the action today, look at it on a daily chart. We had all-time highs this morning, right? The black step line crossed over the MA1, crossed over the blue and climbing right here. Usually when that happens, it's followed up by a bullish day and then several bearish days. Okay. So it's setting up for that. It is setting up for that right now. And you know, we'll see how it all comes together, but I suspect we're going to have a little bit more run up and then it's going to sell off tomorrow when the CPI comes out. I think we're going to sell off. And then that will give you opportunity. You know, right now, if
PPI
we
was
get up,
better than expected today by a little.
the PPI,
Mm-hmm.
this guy right here. Hang on. This one?
Yeah.
Core PPI. I have lower than expected on all of them.
Right, which is a good thing because
Yes.
prices didn't go up as much as they thought they would.
Yes. Yeah, I mean, that's what I was explaining this morning. I was saying, yeah, this should be good news for us, you know, because the producer costs are less. So that should mean the consumer costs are less eventually.
They're measuring the cost in the supply chain before it gets to the consumers.
Right, exactly.
Yeah.
Exactly. And this number going down is a good thing for us, for consumer. And they're calling it red because, well,
It's lower than forecast.
yeah. Well, it's lower than forecast, and it's well, it's not necessarily good for interest rates. I think that's what they're suggesting it's red for. I mean, the forecast was here, but whether it's higher or lower than forecast depends on their opinion of what it's going to do and how they look at it. You know, I suspect, but it's red. This should be good for consumers, and tomorrow's CPI should also be good for consumers. So I expect what we're probably going to see is maybe if we get another push up right here toward the end of the day, when the CPI comes out tomorrow morning, we're going to see a downward move. We might see an immediate upward move, but I think overall we're going to see a downward move going into the FOMC. I think they're going to prep it, and then, well, we'll see. I don't know how it's going to play out, but that's what I think. This morning I thought it was going to come back down to this level and bounce off it, and well, we got that much right. Actually, this is the level I think it's going to be at next week. When all the FOMC is done, I think we'll probably end up back at this level right here next Thursday. I don't know. We'll see. I should put a tag on that and say return middle after FOMC. We'll see if that happens. I don't know where that tag went. It's still there. Tagline inside, top, left. There it is. Okay. We'll see if it comes back to there. These are all-time highs right here. It's well, I think we're going to get a little higher and then get a retracement. That's what I suspect will happen. But who knows?
We still got a shot, even though we're off the high of the day, we've got a shot at getting a new all-time closing high. We have an intraday high, an all-time intraday high. But if we stay where we are right now, we're above yesterday's historic closing high.
Yes. Well, we'll see. They could be trying to do that, trying to make that a thing. I don't know. Again, we're just going to trade what's in front of us. I think it's going to go down in the short term here. I think it's going to go down a little bit, and then we'll see how it goes at the end of the day. You know, for right now, we don't have any trades here developing right now. This is green, but you're below everything. This is green, you're above everything. This is green, you're almost there, but the trigger's not right. And this is green. Needed down close followed by an up close on the gold. You're not going to have anything here on the NQ. And the ES is not coming together right. We need a down close. It's going to flatten out underneath here. Need a couple of down closes and an up close. So these just aren't coming together right now. And on the ES, you know, I didn't do the whole squish it up daily analysis on the ES. I figured it was going to look a lot like the NQ, but it actually doesn't. The ES actually looks a lot better than the NQ because you have this leg right here to there, and this is about a 50% retracement. So the ES is looking a little better than the NQ. It went through the 50% retracement, and it's back up above it right now. So it's not showing as much weakness right now as the NQ was, because this is what you're working with from here to here. Right there up to right there. Here's your 50%. We're right at it right now. We got above it, came back down to it. It's just consolidating at it right now. And you know, as we get more toward the end of the day, we'll see how things work out. I think that's gonna become significant at the end of the day. You know, I'm gonna mark that. It's under here. Let's use this one. And it's under the arrow. Here it is. Use this guy. I think that right in here is going to become a significant area by the end of the day. But for right now, we're just going to trade what's in front of us. And we'll bring it all back here and here and there. No trade here on the NQ yet. We're just about to have a trade here on the ES. We needed a couple bars, is what I said. We're testing the midpoint right now and that area that I just drew in. The gold needs a down close followed by an up close. The ES now just needs an up close. You can do it on this bar or the next one. Right, the low is 44.75, so we find 46.75 right now. 46.75. That's what it looks like on the top. All right, it's 119. 120. So we have 10 minutes left. And this, we need a down close followed by an up close on the gold. Now, if we get the down close, it can't go down anymore after that down close. It won't be a trade. We need an up close followed by a bounce off the midpoint on the NQ. We just need an up close here on the ES, and we don't have anything going on here with the Russell. Okay. Okay, so the low of this is now 44.75, so 44 up to 46. We're not in the oversold here. You see there's no red down here. It is pretty handy, isn't it? This will be a trade here on an up close on the yes. Gold needs a down close followed by an up close. Level 44.50, right, 46.50. 44.25 to 46.25. 44 up to 46. 43.50 up to 45.50. Right, now the gold cannot go down anymore. I think it's already gone down too far. Nope, you could still have a trade on the gold. It's still possible on the gold at 2.7. The ES, the low is now 325, so 525 is what you need. Gold can't go below 1.7. Okay, if it goes below 1.7, you're not going to have a trade. And this is almost out of range now too. Nothing on the NQ, nothing on the Russell. This can't get below 250. And there it is, cancel. That one's out. And the gold is out too, I think. Yep, gold is out too. Cancel all. Now the reason it's out is because if you got an up close, it'd take it out of the oversold and it would put you below the midpoint. All right. So now when it does actually come out, the midpoint's going to get reset. And same thing over here. So we ended up with no trades for all that. And we now have 6 minutes left. All right. Well, we don't have any trades. Nothing. Let's go out here. Do this one more time. This one more time. Back here. All right, so no trade there. It's flipping the YBR right now. You see how it just hit the yellow right there? It's going to flip that YBR. Gold hasn't gone that far yet, but the Russell just did. The NQ had already done it, and the ES is just doing it right now. Okay. This is almost a trade here on the NQ. We need an up close followed by a down close. up close followed by a down close. Still get it there. Still get it. We're not out of time, but we could still get it. We need an up close followed by a down close on that. Nope. Now we need 2 up closes followed by a down close. Wow. Now we're not getting anything. Gold didn't move at all when all 3 of the indices just had a little bit of a quick movement right there. A little bit of a quick movement. A little bit of a big move. All 3 of the indices just moved. And gold didn't move at all with that. Interesting. So the midpoint is flat right here. We're in the overbought. We need to hit the midpoint and get the down close before it gives us another down close. That's what needs to happen on the NQ. Okay, it's the sequence that needs to happen. There's the first up close, didn't hit the midpoint. This one could hit the midpoint and give a down close. So this could be the trigger bar. It's possible. It would be a trigger bar. It's the only one right now in the four markets. That could be a trigger. No, it can't be. It's too far away. If you end up with a down close here, it's going to throw everything off again and reset the midpoint again. And there it is. Just reset the midpoint, and then you got to start all over again. 2 up closes followed by a down close. Every time it goes into the oversold, that's what you're going to need. At minimum, you're going to need 2 up closes followed by a down close. Every time it goes into the oversold, at a minimum, that's what you're going to need. Because it takes 2 to get it back into the overbought, and then 1 down close to get it out. You guys all follow that? It doesn't look like we're going to get any kind of a trade here, guys. This is not a trade over here on gold. The midpoint has to be flat or a bar before the trigger. This is not a trade here on the NQ. It needs to get into the overbought. So depending how this bar comes together, it's probably not going to be in a trade at all here. Depending how that bar comes together. All right. It's not looking like we're going to get anything, guys. We could have a close. I mean, on a down close right here, we could have something, but I'm running out of time. And I did. I just ran out of time. All right. So I don't even recall if we had a trade in this whole session. Anyway, let me show you how to take the free trial. All right. To take the free trial, you go here to mytradingview.com, click on the purple button. There's no credit card required. Click on that. It's going to bring you to this registration page. Just fill it out. Make sure you have TradingView login ID down here at the bottom. If you don't have one yet, click on this button. Watch the video. Get your ID, put it in here, and we'll be able to get your indicators indicating for you on your desktop. Right? Hit that register button, and we'll know you did all that, and you'll be ready to go with us in the mornings. All right, that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. I am.
Excellent.
Okay, recap of the morning session.
Today it took 6 minutes and 1 trade to get to $1,250 with 10 contracts.
Good job.
Thank you. Thank you very much.
Okay, guys, we made it through each and every one of the individual markets. We'll take one last look at the daily. There's a new all-time historic high at 65 and a quarter. Now, keep in mind, the all-time historic closing high is right here. So if we don't go much lower, we'll also have a new all-time historic closing high. But last time we put in a new all-time intraday high, we sold off. We sold off. So, not predicting that's going to happen today, but the market does have a habit of repeating itself. So whatever it is, be aware tomorrow morning if you trade pre-market 8:30 a.m. Eastern, you're going to get the CPI numbers. We got the PPI, Producer Price Index, today, better than expected by a little bit. CPI comes out tomorrow, the Consumer Price Index. And if you missed any of the markets that we covered during today's broadcast, about 45 minutes after I sign off, you can go to youtube.com/CFRN and you can watch today's broadcast in its entirety. To become a member, send Valerie an email, support@cfrn.net. In the email, let her know you'd like to become a member. She'll send you the information to become a member. She'll send you a link that you can click to make your payment. Then, once you've made your payment, she'll send you a ton of stuff. Create a folder in your email client. Put all those emails, stuff, some of it you won't know what it is. Don't worry, you're going to need it on your learning journey. So just put it in that folder, okay? So you know where it is when you need it. As a passport holder, you'll get 2 hours of live interactive training every trading day. Real trades in real time and real markets. It's interactive. So you're asking every question that pops into your head. You're listening, you're learning, you're asking questions, and you're trading along in your demo account so that you can qualify to go live. Along with 2 hours of live training, group training every trading day, you also have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's just how markets work. As a passport holder, you get the Logic 247 alerts around the clock. The concierge trade alerts, the second they're published each evening, typically 5 minutes ahead of the Globex Open. Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones. And once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. Thursday afternoons, you'll get an invitation to attend the Members Only Workshop every Thursday night at 8 p.m. Eastern. And you get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof. One low price. Let's wrap it up with our good word for today. The Bible helps us to overcome temptation. Part 1. For the Word of God is alive and powerful. It exposes our innermost thoughts and desires. Hebrews 4:12. It seems like no matter where you look nowadays, there are temptations. Our young people are bombarded by imagery that confuses, seduces, and erodes standards of decency and self-control. A wise and devoted 80-year-old pastor was asked at what age sexual temptation was no longer an issue. Without hesitation, he replied, "It must be sometime after 80. The truth is, if you're breathing, you're vulnerable. And it doesn't end there. Research shows that a growing number of women are becoming ensnared in the easily accessible world of seductive literature, movies, videos. Willpower, internet filtering, and personal accountability are all valuable and can help, but these alone won't bring about deliverance or provide healing from the moral wounds inflicted by the enemy. We all need to hear and heed some Bible directives offered for our protection. Jesus said in Matthew 5:27, "You have heard it said, you shall not commit adultery. But I tell you, anyone who looks at a woman lustfully has already committed adultery with her in his heart." The first step is to recognize that lust is destructive and scripturally forbidden. Now, Jesus isn't talking about a momentary glance. He's talking about a longing look that inflames desire and leads to sin. It implies a process rather than a fleeting thought. The Greek word blipo, used here for looks at, implies special contemplation or willful extended thought. Clearly then, a look that stirs up wrongful passion should be our cue to call on the Holy Spirit to help us resist sin and walk in purity. And that's our good word for today, part 1. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.